Welcome back to your weekly market outlook. This is for the 18th of December 2023. This is going to be the final full trading week for 2023. So holiday season is obviously going to start next week, and next week is not going to be a full trading week. Now let's just jump quickly into what we have from last week in terms of fundamentals. Obviously, the inflation number from the US is the main focus. So we have the inflation number pretty much at consensus. We saw headline inflation drop from 3.2% to 3.1%. Core inflation remains stable at 4%. The monthly growth does pick up a little bit from 0% to 0.1%. The core monthly picked up from 0.2 to 0.3%. Obviously, all this factors into what the FOMC is projecting now. About 2 weeks ago, I think market was widely speculating in terms of how many rate cuts in 2024. There were about 5 to 6 potential rate cuts that was already priced into the market. And the official confirmation from the FOMC, it's only 3 rate cuts in 2024. That is at least from what we have in the dot plan from the new economic projections. Now, market does something really weird though, because FOMC's confirmation was 75 basis points. Market actually instead priced in for 150 basis points cuts in 2024. So we saw the US dollar being pressured lower, and then we also have comments coming out from the Bank of England as well as the ECB during their monetary policy decision that they are likely going to keep interest rates for higher for longer. So we're not looking at a pivot from the Bank of England and the ECB, unlike the FOMC. What the FOMC basically announces last week was basically a pivot from a monetary policy tightening to loosening up a little bit with the announcement of the potential rate cuts in 2024. And we also got comments coming out from during the press conference that the Fed is actually, they don't actually want to over tighten, because previously when they over tighten, it's very hard for the economy to kind of recover, and they are trying to avoid a hard crash on the economy itself. So we saw the pivot come out from the FOMC. We didn't see that from the ECB and the Bank of England, so kind of pressured the US dollar a little bit lower. Now, end of the week though, from last week, I think with the flash manufacturing PMI and services PMI coming out from the Eurozone, the US, the UK, all of them came out a little bit lower in terms of manufacturing numbers. The US, the UK, and France actually came down a little bit lower. I think the only one that picked up was Germany. So that kind of reversed the whole movement on the weak US dollar for a little bit last week. But general tone for that was that we basically see a much more dovish FOMC, and that kind of pressured down the US dollar a little bit. All right, so for this week, I think the key numbers to watch out for, we have the RBA meeting minutes tomorrow, which is probably not going to be a huge impact. The Bank of Japan interest rate decision is definitely going to be key, because we have seen the carry trade on the Japanese yen crosses unwind the past 2 weeks, and that's on the back of comments coming out from the Bank of Japan that they're actually going to move away from negative interest rate decision. Tomorrow is basically the official confirmation. If they're going to be announcing it tomorrow, then it will be done tomorrow. I think they will announce it formally. Whether or not they're actually going to move away from negative interest rate decision tomorrow, I think the market is currently pricing in for a lower possibility for that to happen. I don't think the Bank of Japan is going to end negative interest rate decision tomorrow, but it could still happen, right? Either way, if they do move away from negative interest rate decision, if negative interest rate tomorrow, if they kind of shut it off tomorrow, it'll be beneficial for the Japanese yen. If they come out with a formal announcement that they will be doing that in 2024, that is also going to be a positive for the Japanese yen. We're likely going to be looking at the carry trade unwinding to continue to happen. We're likely going to see the Japanese yen continue to strengthen on the back of this shift or pivot from the Bank of Japan. Obviously, what the Bank of Japan is doing the opposite to what the FOMC. So the FOMC is about to loosen, the Bank of Japan is about to tighten right now. So we're actually looking at these two central banks pivoting pretty much in the same month. Very interesting because one is for a looser monetary and the other one is moving away from loose monetary policy to tightening the monetary policy in Japan. Other than that, we have the inflation numbers coming up from the UK, expecting the inflation numbers to drop from 4.6% to 4.3%. Final GDP numbers from the US, we're expecting a 5.2% for the final quarters, and previously was at 2.1%. So we'll see, because the final number, it's typically the year-on-year number on the GDP. So it'll be very interesting to see what happens here. I think the consensus is at 5.2%. So we'll see what happens. Are we going to be looking at anything higher than 5.2%? But it is still going to be a positive number for the US there. And wrapping up the week, we have the PCE numbers. So the core PCE index is going to be expected to remain flat at 0.2%. Income is expected to pick up a little bit from 0.2 to 0.4%, while spending picking up a little bit to 0.3%. All right, let's just jump in onto the technicals. We are expecting the market to kind of die down a little bit, right, in terms of volume and volatility. For now, we anticipate more of a range-bound market condition to kind of happen in the major currencies. Now, for the Aussie USD, we are range-bound between 65 cents to 67 cents, focusing a little bit more on the 67 cents because we have a little bit of a bearish order block there. We also have a Class A bearish divergence. I think this put together is more of an indication that price could actually fail at 67. If that's going to be the case, then we're likely going to be looking at price moving in a little bit lower again, because it's more of a range-bound market condition with considering the last 2 weeks in 2023. We're expecting a drop in volume. We're expecting less participant in the market. We are more anticipating a little bit more for range-bound market condition. We're going to be looking at support coming in at 66.50, 66, 65.25. So about 50 pips, you're likely going to be met with a little bit of support for the Aussie USD. And if 67 cents caps the market, then we're likely going to be trapped in that 65 to 67 cents range on the Aussie USD. For the EURUSD, we're still capped by 1.10. We didn't see a new high posted out by the EURUSD at this point in time. There's also that bearish divergence, a Class A bearish, regular bearish divergence, which points to a potential reversal. We also have a dark cloud cover from the close on Friday. Price is currently back within that 108.50, 109 range. This is going to be our immediate support for the pair here. Any break below 1.0850 will likely track the EURUSD lower, 1.0750, 1.07, but again, we're not anticipating a crazy volatility in the euro here. We're expecting more of a range-bound market condition, although the range is pretty huge. It's between 1.07 to 1.1, so that's about 300 pips off range. The pound USD is probably going to be the stronger currency comparing it to the Aussie USD or the EURUSD. This one here continues to break a new high. So in terms of break of structure, that's still within a very strong uptrend. And considering that we do have a little bit of a fair value gap building up right now from Wednesday to Friday's close, that puts the fair value gap at 1.2650. So we do anticipate a little bit of a support coming in at 1.2650. And if price manages to bounce off 1.2650, close back up above 1.27, we are likely going to be anticipating a move towards 1.28 on the pound USD. If it does break 1.2650, not to worry, because we do have support coming in at 1.26 and 1.2550. We also note another block between 1.25 to 1.2550 on the pound USD. But again, yeah, the regular divergence is still there. We're still looking at that as a potential warning. Price could fail. But for now, really depends on whether or not price is able to close back up above 1.27. If it does, then we are likely going to expect a much higher push on the pound USD, potentially towards 1.28, 1.2850 in the near future. Now, we've got the dollar Japanese yen, obviously. And the mood for this one here is that, yes, we still anticipate the Japanese yen to strengthen. However, we might see a little bit of a short-term pullback. Now, the pullback is probably going to be very limited. First resistance we are anticipating is going to be at 144. This is going to be the consequent enlargement on the fair value gap, which is very close to 144. Beyond that, we have the order block at 145 to 146. So we have three major resistance: 144, 145, 146. price could bounce off the current price level, which is about 142, and if it does, then we might see that correction towards 144. Now obviously you can act on two things here, because you can actually trade the potential bounce from 142, provided that you have a stop loss 141. But do consider, if this is going to be the path you're going to take this week, this is going to be countering whatever the trend is, and this is such a strong trend with potential outcome from the Bank of Japan pointing to a possibility of a stronger Japanese yen. So the safer alternative would actually be to wait for that pullback to be completed. Once we see price touches 144 or maybe 145, we see the price reaction there. If there's a rejection at 144, 145, and the Bank of Japan comes in and announce that yes, they are moving away from negative interest rate, then it is actually much safer to wait for that pullback to happen before shorting the dollar Japanese yen. But I do expect the dollar Japanese yen to have a high volatility and high volume for this week. I think this is probably going to be the most traded currency for this week. All right, finally we have gold here, and for gold we are hinging on a little bit of a support here at 2000. So what we want to monitor is actually 2000. It's not going to be a good idea to take a position at this point in time, right? Because we need to see how price interact with that 2000 level. If it bounces off 2000, then gold could actually push up a little bit higher towards 2050, 2070. But if we lose support at 2000, we're going to be tracking lower. We're going to be looking at a price movement towards 1975 and potentially towards 1950. There are no trend with gold at this point in time. This is considered to be a range-bound market condition, but the overall condition is that this is above the Ishimoku cloud. RSI points to a kind of a neutral momentum, so it is going to be a range-bound market condition dependent on what that 2000 level is going to affect price, right? Is price going to bounce off 2000, or is it going to break below 2000? So if you're looking for a long trade, you might be better off waiting for price to move closer to 2000, see if it bounces off 2000 before going long, or if you're thinking of going short, then you might want to wait until price actually break below 2000. All right, so with that, good luck with your trades. Don't forget that this is the final full trading week. We might see a drop in volatility and volume for this week, because I think a lot of traders are probably going to be going away for the end of the year holiday. But next week, most definitely, we're going to be losing a lot of volume and volatilities. With that, good luck with your trades, and I'll see you soon.